Hi, all. I'm Cullen Haynes, and welcome to Lawyer Lending Live. And those rewatching, hope you're having a great Wednesday or whatever day you watch this. My next guest is one of our leading brokers, one of our own leading broker for the last 4 years, Mr. Luke Mansour, and looks after our not only our valued leading legal clients, partner clients, but high net worth clients. He does a lot of complex deals as well. So he's well versed to be talking about what we're going to be talking about today in promotion season. So you just made partner. Now what? Could you please make very welcome Mr. Luke Mansour. Luke, how are you, sir?
Thank you, Cullen. Doing very well, mate. We are, as you would know, quite busy here. 12 rate rises we're in now. So it's a refinance heavy market, and there's a little bit of hurt starting to creep in from what we're seeing.
That's what we're noticing, right? That's what we're noticing. And everyone kind of breathed a sigh of relief in the office yesterday when the RBA held the cash rate for a second month in a row, right?
Yes, yeah, absolutely. I did for my personal finances as well as a lot of my existing clients who I know were nervous for another 0.25, but things have held off for
They have indeed.
Until September.
They have indeed. Because what happens is we'll get clients' documents, we're ready to submit, and then the rate rise goes in, and then all of a sudden all these banks increase their rates, and it changes the whole position. So we quite welcomed yesterday's nomination by the RBA, and well done. It's probably one of the last harrowing things that Governor Philip Lowe will do. Now, what I've got a time on here. It's 12:41 Australian Eastern Standard Time. If you've got any questions for this juggernaut, put it in the comments and we'll try and answer them in real time. Kayla Curtis, leading solicitor, has already said, hey, Cullen. Hey, Luke.
Hey, Kayla.
Hey, Kayla. Thank you for joining. And I encourage you, if it's something more sensitive, you just got made partner, you just got promoted, and you want to know more about your lending, either reach out to Luke directly, or I'll put the inquiries inbox here, inquiries@legalhomeloans.com.au, and we can look at you a little bit more deeply later today. But nonetheless, mate, obviously, congratulations to anyone who's watching who just got promoted. It's promotion season, which is fantastic. And those who just got made partner, salary to equity, well done to you as well. What's this lifestyle creep that we talk about often with our clients there, Luke?
Yeah, good question, Cullen. I mean, what it really entails is naturally, as the income starts moving in an upward trajectory, so does the lifestyle spending as well. And banks are historical beasts in the way that they operate. They always look to see what they can evidence and verify in the past. And as your income is increasing and so is the spending, that's what the banks will see in some of their statements that we provide. So, I mean, one of the big benefits of using us to get ahead of being a victim of the lifestyle creep is we can chat, have a conversation, and work out a reasonable level of expenses that will be post-settlement once you've got the new $1 million or $2 million mortgage in place, because you may be spending like the Wolf and Wolfess of Wall Street now because you don't have the big mortgage that you need to worry about month to month.
No, couldn't have said it better myself there. Look, having that conduit to the bank is important. But what I would say also, with everyone in law getting a promotion recently and getting those new roles, the income goes up. And obviously, the first call they make is to us to see, okay, now that I've got my new salary of 10, 15, 20K, how much does that mean I can borrow? And I was running the numbers yesterday with someone. If you're on 100,000 minus expense, assuming you had no expenses or anything like that, rough borrowing power indicatively is about 500,000 right now in the current market. So it gets even more difficult if you're a new partner watching. And I know you're one of our partner specialists because you deal with a lot of new partners, existing clients, high net worth partners. Luke, what's the pain point? Obviously, when someone becomes a partner salary to equity, obviously they're excited. They think, oh, I'm on my new scale. Let me see if I can borrow. What typically happens?
Yeah, this is one that comes across my desk semi-regularly, which is unfortunate. It's gotten to that point, but fortunate they've come to us and talking to people who know partner income. A lot of the time, I have people coming to me where they've already approached the bank, seen that, yep, you're a partner, you're earning X amount of dollars. I have no idea how to verify your income. I barely know what a partner is. Send me 2 years worth of tax returns, which is not always what's needed with a lot of our partners, especially the salaried partners. Yeah, more often than not, it's as simple as a CFO letter and 3 months bank statements to verify the monthly drawings. We have, on a case-by-case basis with some of our more advanced lenders and typically in the private arms of the banks where we get the white glove service, at times, even for our newly minted partners who may have only been in the role for a month, we have still been able to get around some of the 3 months bank statements policy and rest solely on the CFO letter that's at hand. So we don't always need tax returns, especially a lot of banks, as soon as they hear the words equity partner, one of their first responses is, send me your tax returns and send me the firm's tax returns, which is quite comical sometimes, especially with some of of the bigger, big law firms. There's no way anyone's getting a copy of their company financials.
No, it's so funny. Like, obviously, we just became staff benefits partners as part of our program with HSF earlier in the year and Lander and Rogers. And if anyone asks for those financials, they're big firms. That's not going to happen. So yeah, if you have been made partner and you walk in on the street to a retail arm of the branch, probably they're not going to understand. Like 90% certain, they probably won't know what a partner is. I promise you. And they'll ask for the 2 years financials. Another part of the bank that not many people know about, which we found quite handy as well, is the private bank. Tell us a little bit more about that, Luke.
Yeah, the private arms. We were actually speaking to a barrister earlier this week, Cullen. We mentioned private bank and had to clarify it's not a private lender. You're money from John Smith, P2 Ltd. The private banks that within the traditional lenders, it's for our higher net worth clients where we have access to the white glove service, private banking lounges, which clients can use. But mainly, some of the bigger benefits is there's more levers to pull with rates. So generally going to a residential lender, you might get a 6% rate, but going to the private arm, you can probably get 5.7, just as an example. So they're often willing to move mountains for our higher net worth clients with sharper rates, and also the credit policy as well. Some lenders, they've got a list of approved firms where even if you are an equity partner, all we need is a CFO letter and we're all said and done, the verification of income. For firms that aren't on the very small list, we have in the past been able to still use a CFO letter and some bank statements because we've approached the private arms of the banks and they're willing to flex on policy that wouldn't be able to get done going through the traditional channels with the standard residential arms of the bank.
Correct. And just to recap, Luke was saying that there are some income metrics to get into the official private banks. It's either 500K in income per year or 2 million lending. The latter is not too hard in Sydney because most loans, when you get to that sort of 40 and above range, you're borrowing that amount anyway, especially in Sydney. So have a chat to us because we can look to get you into the private bank. And there are, I guess, baby private banks, which is called the direct bank, which is like a tier above the retail arm of the bank. If you don't necessarily have this lending, we can still get you into a version of the private bank. And then it's kind of a step up to when you're ready. So yeah, that's a good point. What are you seeing in the market in terms of what people are doing in terms of their pre-approval? Are they getting pre-approval or are they bidding without it at the moment, Luke? What's the story?
Well, there's always going to be people who are less risk averse bidding without pre-approvals. I typically like to advise against it. Everyone's going to lose a few hairs in the process.
Yes.
It very rarely goes smoothly. But look, I mean, what I'm finding a lot of my clients are having success with at the moment is having their pre-approval handy and knowing that it's there if they need it rather than needing it and not having it
Not
and
have
needing
it.
to start from
Exactly.
scratch. So depending on the lender, some banks are quicker than others at the moment. There's some out there where we can get you an approval in 2 to 3 days. Others, it might take 2 to 3 weeks. And it's always the case. I'll speak to a partner on a Thursday. Hey, I'm thinking about looking for the new home. And then we get together on Monday and they found a place and want to move straight away, when the initial call was it's a 3 to 6 month time frame. So things can change very quickly. And a big benefit of having that pre-approval is it's completely free of charge as well. It costs nobody anything to get that pre-approval, and it's quite easy to roll over as well. If you haven't found a place within the time frame that the pre-approval is valid for, all we need is some updated bank statements, and we roll that over again for another 3 or so months.
That's a good point. So just to reiterate, using a broker, there's 17,000 of us. It costs nothing, but we're platinum brokers in the top 1%. So we get preferential rates, turnaround times, and credit policies. But on the pre-approval note, not only does it cost nothing, it lasts for 90 days. So please, 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 I beg you, get your pre-approval sorted now, because if you go and make an offer, and you had this a couple of months ago, Luke, the client said their offer wasn't the strongest. There was someone else who was offering more, but the vendor and the buyer actually liked the fact that, or the seller liked the fact that they had the pre-approval with the least number of conditions. They had a valid pre-approval. In this market, if you can show sellers that you have a pre-approval, that kind of puts you at the top of the list of everyone else, because there's a lot of people bidding without it, And
yeah,
you see
correct.
that as well.
Yeah, I'm finding it's a lot more common of late as well, given the way the market is. Vendors and agents are treating people who can present them with their official pre-approval letter a lot more seriously than those who are saying, I'll give you $1 million, but I can't give you my approval until next week when it comes through.
No, correct. And another thing that comes up during promotion time is, Cullen, Luke, I just started my role. I've 6 months probation. I'm literally my first week in. You probably won't be able to help me, right?
Yes, yeah. I spoke to someone on Monday, actually. Exact same scenario.
Yes.
Started a new role. There's a week between gigs, but I'll come back to you in 6 months when probation's over. Good news is you don't need to wait until probation is over. A lot of lenders have wrapped their heads around the probationary periods, and especially for our elite legal clientele, banks will look at your historical employment. And, if we can see that you've been in law for a year, 2 years, 20 years, probation doesn't really inhibit your ability to be approved for a loan. Yes, employment history is important, but because it is legal, we're already considered a lower risk client to the bank.
No, that's a good point. And that goes hand in hand also with the 90% waiver, which, we started this business 5 years ago, May the 4th, 2018, Star Wars Day. And still, we started with that 90% policy then. And it's still available. But every day we get people asking, I'm a lawyer, can I borrow 90%? Can they, Luke? Tell me.
Absolutely, they can. Whether you're a graduate lawyer straight out of uni, or straight out of your graduate role, or if you've been a partner for 20 years, regardless, as long as we've got the practicing certificate, there are LMI waiving options on the table, borrowing up to 90%. Now, for first home buyers, there are some select options up to 95%, but across the board, where all we need is the 10% deposit plus additional funds for stamps and legals, and we're off to the races. So with the pricing as well, this is a query I get quite often. A lot of lenders will tier the way they price loans. So borrowing in that 80 to 90% bracket, this has been a common question of late too. You're not getting charged a higher rate because you have less of a deposit. You actually still get charged the same rate as if you had a 20% deposit, but you only need to put 10% down.
Makes sense. Okay. That's a good point. And I think what you're also saying, which it should be made mention as well, is that the rate isn't too different between a 90% and an 80%. Is that correct?
That's right. Yeah, especially with how aggressive some of these banks have been of late with their rate rises. at most, you're probably looking at a 0.05 or 0.1% difference between a rate for a 90% loan with an LMI waiver versus a rate on an 80% loan. So there's not a big gap there. And we're not loyal to any particular bank either. We're only loyal to our clients. So there's always refinance options on the table day one after settlement and onwards.
That's a good point. Indeed, indeed. We are vendor agnostic, 30 lenders on our panel. We don't have an allegiance to anyone, but we are platinum brokers with many of them, which does mean that we rub shoulders with not only the credit managers, but the state managers. We get preferential rates, turnaround times, and credit policies. And we all know lawyers love things that are exclusive. So we are one of those 1% exclusive brokers. And case in point, if you have anything hairy or something you need to speak about that someone else would probably lodge and get it declined, we have access to that credit manager. And what do we use that for, Luke? Just to give people context of why we'd call a credit manager ahead of time.
Yeah, good question. I mean, what it allows us to do is actually speak to a senior credit manager anonymously before we even look to process an application officially through that bank. And at least that way we know from the outset what kind of hurdles we might be facing, but it also allows us to best prepare to address those hurdles or those questions that we know will arise when the assessment is conducted. It's a massive tool for us to be able to prepare and put forward applications in the best way possible, having access to those senior credit managers. And again, we can even workshop getting exceptions to policies, getting things done outside of the box before we lodge an application, rather than dealing with it 2 weeks down the track once it might get assessed.
Correct. And there's one step ahead of that as well. We've got a thing called the deal desk with certain banks, which before we even lodge an application, you send us your financials and you sign the privacy. The manager can actually look at your financials in ahead of time and say, yep, we're happy to do this if you've got 1 year financials or there's something bespoke on there. So we're always looking outside the box. All you lawyers joining who have that matter that's probably sitting in your inbox, I'm sure none of you do, that sits in there for 1 or 2 weeks. We deal with that every day. Whether it's buying in a trust, buying with your Aunt Bertha or cousin Jay, or you need to get an SMSF loan and you're buying a commercial property and you need a 30-year term. We see that day in and day out. Chambers loans, come and speak to us because usually the person on the street in the branch is a nomad. They keep changing every 6 months. The average broker sees a lawyer and a barrister 1 every 100 clients. It's very rare that they look after them ongoing. So speak to an expert. You're an expert in what you do. So make sure you speak to an expert on your finance, the most important thing in your life. In terms of just a recap of everything we covered quite a lot. There's promotion season. You can get lending if you're on probation. New partners, we can get lending on a CFO letter and 1 bank statement. We won't ask for 2 years financials. And the pre-approval process, it lasts for 90 days. How long does an application take, Luke, from start to finish to get it approved right now in this market?
Yeah, ultimately it's going to depend on the lender that we look at putting somebody with. But I mean, we always like to say that we move at the speed of thought. And, from day one, getting documents out, we can look to have something lodged in 1 to 2 days. Yeah, if we know there's an auction coming up on Saturday and we get documents on Monday, our goal is we're lodging on Tuesday to put us in the best position possible to have that approval at hand and ready to go and bid at an auction. I mean, in terms of processing on our side, it's usually no longer than 24 to 48 hours until we've got everything together and we're ready to go and hit submit. One thing I did want to mention earlier too, Colin, it's just come to mind, is particularly important for our barristers, our firm owners, and also partners, is to consider the possibility of having multiple offset accounts. The reason why I mention that is, for a PAYG couple that get pay slips, 1 offset is probably all that's needed because you can house your savings collectively in the offset account. But given for barristers, firm owners, and partners, we obviously know that the tax man's going to come knocking every 12 months in July. So what you can do in the interim, whilst you're setting funds aside, is use the multiple offset account strategy to have 1 to house your savings, One might be to build funds for renovations in 6 months, and the other you can use to house the funds you're setting aside for tax. So at least whilst you are building the tax account, your money's working for you and helping you reduce the interest that you pay rather than the other way around and you working for the money.
No, good point. Good point. And if you do have a P&I loan, just remember the more money you put in your offset account doesn't reduce the repayments, but it reduces the interest that you pay. The more principal gets paid off, so the loan term reduces. If you've got an interest-only loan, it's where the repayments do reduce. And if you've got a $100,000 loan and $100,000 in your offset, you pay, you guessed it, $0 on that. Luke, it has been absolutely fantastic having you on. Thank you for sharing your time. I know you've got to get back to it in the team, but really appreciate your insights, my friend.
Thank you, Colin. It's been a pleasure as always, mate. I'll see you in the office soon.
See you in the office very soon. And if you are a legend of law or want to know someone who is, feel free to send them my way. If you have any questions on what we spoke about, reach out to myself or Luke directly, or inquiries@legalhomeloans.com.au. And if you are a head of people, chief of people, HR director, and you like what you heard about the staff benefits program that we have running with many leading big law firms such as HSF and Lander and Rogers, and you want to add value to your staff, engage your staff, and give them the biggest benefit that they will ever get in their life, their home, feel free to reach out to myself or inquiries@legalhomeloans.com.au as well, and we'd be more than happy to have a chat with you. Have a great Wednesday, everyone, and thanks for joining in. Chat soon.